So today's date is the 18th of January 2025. We're recapping Friday the 17th and previewing next week. Monday the 20th is Martin Luther King Day, so there'll be no trading. Market shuts at midday US time, but won't be taking anything. But we're recapping Friday. So this is the Friday daily candle on both ES and on NQ. So as you can see on ES, we have inversed. If I can get it, we've inversed this fair value gap on the daily time frame. We've inversed this fair value gap on the daily time frame. We're clearly very bullish, and short-term draw, I believed, was this high. Obviously, bear in mind this large candle here. This is CPI Wednesday, so it was optimistic to believe we were going to hit this target straight away, but I'd hope that we have a small retracement on Monday and then push up maybe on Tuesday to hit this high, at least in the ES, and then hoping we hit it on NQ as well, so we don't really have any SMT, so we can continue to look up. But we'll take it how it is. So going on to the 4 hour, you can see this is Thursday. Let's delete this. So on Thursday, you can see we had a retracement. We were targeting the 50% level of this large CPI push, and we look here, you can see clearly have hit it. Didn't hit it on ES, but that's fine. We have falls on SMT at this 4 hour fair value gap, which is perfect. That's our reason for being bullish on the Thursday once we hit that gap. But we kind of just stumbled down here. I mean, you can see, and then overnight we had this large expansion up, which made us not that confident in terms of trading for Friday, as we had a big overnight expansion, and in London we had some really nice trades down here, meaning that especially AM of Friday was not going to be that great, and it wasn't really. And then obviously it's Friday, so Friday PM is never going to be too strong either, so it wasn't the best day in terms of trading, but we still took a really nice trade. On the 1 hour, we haven't really got anything to show, so we will go down to the 15 minute. So let's mark out our 15 minute. So let's put this back to New York time. Okay, so we have market open. That's what? Getting confused. I think this is still on UK time. Okay, fine, whatever. So yeah, this is okay. One of them is on UK time. One of them's on New York time. I didn't know I could do that. Okay, so we have market open here. So as you can see, market opens, big push down, and when we see this big push down, because you can see there's a massive expansion here, we're looking at taking 50% level of this. If we put this down to here, you can see we take the 50% level, and that's what makes us bullish, right? So this is the candle where we hit the 50% level. So let's mark that out. There we go. And let's check ES, because I cannot remember what ES did. So at 9 a.m. Yeah, you can see we just have big SMTs here, and we didn't have the retracement that NQ have. That doesn't matter because we were watching the SMTs and stuff like that. Okay, so actually, while I'm here, I can point out there was a really nice 15-minute here. This was a really nice trade to take because we took a lot of liquidity here. There was an SMT at this 15-minute fair value gap. The close was sweet. And I mean, you just got this massive expansion up. I mean, you could take it to this high, which I marked out as a trade that I could have taken. I didn't take it because it was London session. I mean, it was a 12-hour trade, and that's really sweet. It just pushes up straight away. Really nice expansion, and that made us kind of not optimistic about New York session. So as you can see here, we kind of took a couple break-even trades once we hit this 50% level, but the real big trade was actually on the 15-second time frame. But if we jump down to the 5, this is a really nice trade. Although technically it's invalid, I think it was still a very good trade. It's invalid for 2 different reasons, but it depends how you take your kind of your inverses. If you trade this strategy and it depends what your kind of risk tolerance, however you manage. So, for instance, the person that I learned off Dodgy would class this as a break-even trade, or you wouldn't even actually technically enter it, but it depends on you. So, on the 5 minute, as you can see, this technically isn't a close because if you look at this candle, we don't actually close above, so it's technically not valid. And then internal high is break even. So technically, this would be a break even trade. However, had you not had those break even, this was a really, really nice trade because obviously I'd class that as a break even if I was to take this 5 minute. So that's your break even, and you push all the way up, retrace it down, don't get tapped out of break even, and push all the way up. However, we did not see internal high taken. We actually saw it taken with SMT here with ES. So that made us. It didn't make us bearish, but it was just frustrating. So this would have been a really nice trade. This is a 6-hour trade. However, I think it was even nicer. So if we did this, so obviously we're taking the 50% level. However, there was an SMT right there, and if we were to mark these out, so we have this low and this low, and as you can see here on ES, we have an SMT. So this was looking really, really good. Drop into the. I know we had delivery. I'm trying to figure out where it was. I took a 15-second, and I'm trying to see. So no, maybe it was in a 2 minute. I don't know, but we have some sort of delivery from a fair value gap here. I can't remember if it was like a 2 minute, whatever it was. And I took this. With my trading strategy, if I am to close this high up into a fair value gap, I will just take it. It works well for me. Occasionally that doesn't pay off, but it pays off more times it doesn't. And I took this with 10 points of risk. If anything, a little cautious, but I thought it was fine. I thought it was a good trade. We did invalidate. The reason why I took this on the 15-second, had the confidence to take it despite not closing the market, is because we actually closed a 30-second fair value gap at the same time. As you can see here, this candle closes at 10:28:30. So I was really confident about it. Break even point was here, which was really good. And then in terms of a take profit level, because we had a big bearish move down here, this meant that whatever this candle was, we were going to cause a 5 minute fair value gap around this area. And so my point was, I'm going to wait for this 5 minute to close, this 10:25 to 10:30 candle to close, and then whatever that high is, I'm going to take that as my first take profit and take half. So as you can see, we have this high, and it was wiped out straight away. So that was take profit one. I haven't got a preset for it. I'll just write it down. So that is take profit one. For instance, just above there, so you can kind of see that I took it there. And if we were to go to the 5 minute, you'd be able to see this is our take profit one once this candle closes, and then we actually smashed straight above, and this was the 5 minute fair value gap that was essentially inversed again. Inversed in terms of my strategy, I would still take this, and this made us incredibly bullish because I knew that we'd be pushing up to at least this 5 minute, but actually there is a 15 minute here that was really, really nice. If you trade higher time frames, this was like so textbook. I mean, you would have broken. I don't know where you would have set your break-even point, but taking this, so you put it to that. I mean, let's say we're doing 6 points of risk. I mean, I cannot believe that failed. It only failed because it was Friday, and we had a big London expansion. If this was any other day, this would have been a beautiful, beautiful trade. I mean, you wouldn't have actually been out of it, but you would have been down here, and it would have been a shame. But then you would have. Well, technically, this would have been fine, right? Because you would have had pushed up, pushed down. Let's say you hadn't even set your break even point, you would have set your break even there, and you would have been fine. But continuing the trades that I took, this 15 seconds. Obviously, I had this move straight away. I took some more profits at where did I take more profits at? I can't remember. Did I have? Don't know. I can't remember where I took profits. But, I think I took some profits at this 15 minute, maybe at the 5. No, I would have taken it at the 5. That's where I took it because I was waiting ages. So I took almost all my profits there at the 5, and then I was holding 2 contracts to push up to this high, which we never hit, but I kind of trailed my stop. And I ended up hitting it around this level because I only needed X amount for the profit for the day, and I hit it just around here. So it was a really really nice day, and we caught the exact low. We caught this move up. I mean, let's say we got to here, right? Even if just as an internal high, we're looking at a 131 point move, 13R. It was really really nice trade. Very profitable. Very happy with it. Um, so that was Friday recapped. And now let's look on to next week. So we have Martin Luther King Day on the Monday. So trading, there'll be no volatility. However, NQ has now closed this gap. Obviously it's not an ideal setup because it's not that low down. This would have been really, really nice had there not been a fair value up there, which would be the top, so it would have been valid. But we're looking bullish. It's long story short, we're looking very bullish. We have a fair value gap with an internal high in here on ES, which makes you a little worried, and it's the same with NQ. However, I think surefire this next week coming up, this ES high is going to be hit. Either we're going to hit it early in the week, and then we're going to push back down and probably form SMT, and we'll just wick it and go down, or, which I prefer, we end up having a small retracement down, maybe like on ES, like maybe hit the 50% on ES, and then push up and we close above this high. If we can close the daily above this high, then we at least would be wanting this high, and then all-time high is just up there. So depends how price decides to move. Historically, if we have a strong December, January tends to be strong as well, and we did have a strong December, thanks to Trump. So yeah, we'll just see how it is. But I think bias will be dependent. Obviously Monday won't be trading, so we'll have more clarity on what we think is going to happen, as Monday is either going to cause a retracement or we're going to push up and close down. So bias is difficult for the oncoming week due to Monday. Looking at the weekly time frame, it's a bit messed up on top of the hex, but you kind of get the idea. We want to be pushing up. Obviously this weekly candle is really nice, although we have no delivery. Do we have an SMT? We don't have an SMT, but this is lesson number 1 of trading is how candlesticks work and what's a bullish candlestick. And even according to CRT, we're looking at this high being hit and this high being hit. That's that high, obviously. So that's what we want. So the fact that CRT is doing that on the weekly, the fact that we have kind of a consolation day on Monday, I'm looking at a bullish week, and long term looking to all-time highs, hopefully.